Hello students, Assalamu alaikum. Today we are going to discuss AS Accounts June paper. First part I have already uploaded on YouTube. Today we will do the second part inshallah. Actually, first part was supposed to be a bigger part, but because of some technical problems, it was a shorter part. But today we will complete the paper inshallah. And one more thing, it is a humble request. Please kindly subscribe my channel. All those visitors who are taking advantage and who would be taking advantage, uh, kindly subscribe my channel. Thank you. So let's see your paper. So here is your paper. Okay. Uh, First question of partnership we have already done in my previous video last time we uploaded. So June 1990, June 20, 2022, paper 22. And question number 2, we have to start from today. Sorry. Okay. Now, see. Bismillahirrahmanirrahim. B Limited owns various non-current assets. Non-current assets depreciate due to a number of factors, including wear and tear. State two reasons other than wear and tear why not current assets depreciates. Why non-current assets depreciates? So first is lapse of time. Okay. Second could be obsolescence. Okay. Now describe consistency concept. So what is consistency concept? You all know we have already studied consistency concept in our O levels, and this concept requires that similar items should be accorded similar accounting treatment. This is the definition of consistency concept. Okay. Now, the company's financial year ends on the 31st December. Property was purchased on 1st January 2019 at a cost of $850,000. Property is depreciated at 5% per annum on cost. On 1st January 2021, the directors decided to revalue the property at $1.2 million or $1,200,000. Now, what we have to do, the life of building expired is 2 years, 2019 and 2020, before revaluation. So 5% depreciation, 5% depreciation per annum means 10% for 2 years. So that would be 85,000. Yes, 10% of $850,000, 85,000 is depreciation. Okay, and we have to okay. So see, 850,000 minus 85,000. It means 765,000 is the book value of property on 1st January 2021. If we are bringing it to 1,200,000, that means how much? 850,000 minus 85,000, 765 minus 1,200,000, and we have to increase the value of property by $435,000. So, okay, what we have to do? We have to make an entry over here. Okay, now property. We have to debit property by $350,000, and what we see directly, 1,200 1,200,000 minus 850,000. It means we have to increase the value of property. We have to debit by 350,000, which we can see. Okay, the difference between cost and the revalued value of property after revaluation and the value of property before revaluation, the difference is 350,000. Here what we have to do, we have to finish the provision for depreciation for 2 years. Provision for depreciation is going to be debited by 85,000. So it means here we will create revaluation reserve, that is 435,000. Actually, this will, you can get 3 marks. Okay. Now move to the next section. Acha. Now come to this additional information for required D. Furniture and equipment was purchased on 1st January 2019 at a cost of $140,000. Furniture and equipment is depreciated 10% using the reducing balance method. On 1st September 2021, the director sold furniture and equipment which had cost $21,000 on 1st January 2019. A full year's depreciation is charged in the year of purchase, but none in the year of disposal. Okay. Now we purchased this furniture in January 2019. This is the thing. January 2019. Okay. We purchased. Acha. For $140,000. Okay. Now 19, we have to calculate a depreciation for 19 and 20, 2019, 2020. But we don't need to calculate for 2021 because we do not calculate any depreciation, none, in the year of disposal. Getting my point? So what we have to do, the problem is, we have to, what we have to do actually, calculate the charge for depreciation of furniture and equipment for the year ended 31st December 2021. So what is the problem in this? The problem is, okay, the problem is we don't know the depreciation, provision for depreciation. Okay. We only know the cost of furniture and equipment, which was bought at $140,000. We know the value or cost of those furniture and equipment which was sold on, which had cost $21,000 and sold in September 2021. So what we have to do, first we will calculate the depreciation of the total asset, the total value of furniture and equipment for 2 years. Okay. Okay. Here. Okay. Then computation. Okay. Then depreciation. Then provision for depreciation. And the book value. This is book value. Okay. Now in the year 2019, okay, the total cost of furniture was 140,000 multiplied by 10%. 10%. Okay. So that means depreciation charge 140,000 multiplied by 10%. 140,000 multiplied by 10%. That is 14,000. Okay. Provision for depreciation, obviously, first year 14,000. Okay. Now book value 140,000 minus 14,000. That is $126,000. Okay. Now come to year 2020. Okay. Depreciation $126,000 multiplied by 10%. Okay. So that means 12,600. Okay. Now provision will add 26,600. And the book value here 140,000 minus 26,600. Answer is 113,400 is the book value after 2 years. 113,400. Done? Okay. Now what we have to do? We have to calculate depreciation for 2021. That was actually required. But the problem is, we know that this asset, 21,000. Do you know what is the provision for this asset? We don't know. So what we do, we will compute again the same thing for 2 years with that asset which was sold. Okay. Asset sold for costing $21,000. $21,000. Okay. So what happened with that in 2019? Okay. For only we are calculating 2 years depreciation only for this asset. $21,000 multiplied by 10%. Okay. It means 2,100. Okay. Provision for depreciation, yes. First year 2,100, and the book value is 21,000. Oh, sorry, 21,000 minus 2,100, 18,900. Now, 2020. Okay. Cost is now book value 18,900 multiplied by 10%. Okay. That means multiply by 10%, 1,890. Okay. Now here we'll add the provision. 1,890 plus previous 2,100, total provision 3,990. Done. And here the book value would be 21,000 minus 3,990, that is 17,010. Now what we have to do to compute the depreciation for the year 2021? What we have to do? Okay. Year 2021. The book value of total assets is 113,400 minus the book value of the asset sold 17,010. It means your book value is 96,390 after selling your asset costing $21,000, whose book value was 17,010. The total book value of total assets is 113,400. So if we deduct now, the remaining assets have book value 96,390 multiply by, okay, multiply by 10%. So it means this year's depreciation is 9,630. This is your answer. Getting my point clear? Okay. There are so many ways of doing this question, but for your convenience, I've done in this way. Getting my point clear? Okay. Let's move to the next part. Motor vehicles were purchased on 1st January 2020 at a cost of $84,000. Motor vehicles are depreciated at 20% per annum using the reducing balance method. On 1st November 2021, a new motor vehicle was purchased at a cost of $44,000. A check for $17,000 was paid for the vehicle, and the balance was covered by the part exchange of a vehicle which had cost $40,000 on 1st January 2020. Okay. Now, out of this 84,000, we have sold a vehicle costing 40,000. Okay. Here, what we have to calculate trade-in allowance. How to calculate trade-in allowance? Means See, the new machine was $44,000. Minus we have given him 17,000. We have paid $17,000 for the new motor vehicle costing $44,000. That means we have not paid $27,000 to the vendor. Why we did not pay $27,000 to the vendor? Because we have given him a machine which had cost 40,000. See, getting my point clear? So it means our vehicle, which costing 40,000, was sold for $27,000, or that was purchased by the vendor of the new machine. You know, exchange what we usually have in Karachi also. Give your old fridge and get the new one, and they give you a discount. That is called trade-in allowance. Trade-in allowance is the price of our old fridge. Are you getting my point here? So what we have to do, we have to make disposal account. Okay, no problem. So what we have to do here we will debit in disposal account the cost of motor vehicle which was sold. Motor vehicle that was sold for $40,000. Okay. Now trading allowance that was sorry. No, okay, so that is correct. Trading allowance that was $27,000. What we are missing here, the depreciation of machine. Sorry, depreciation of motor vehicle. We don't have. That depreciation will tell us whether we have made a profit or gain on sale, or we have sustained a loss on sale. So what we do, that was purchased in January 2020 and we have sold in 2021, no depreciation in 2021. So 1 year's depreciation 20%. So that means 40,000 multiplied by 20%. That is 8,000. So it means this machine has, this motor vehicle has only provision for depreciation, that is 8,000. Yes, we have sustained a loss on exchange. I'm sorry. Loss on exchange. How much? 5,000. Now, don't forget to do one thing, that is completing your T accounts. Please complete your T accounts, so you won't lose marks. That is, here we have 40,000, and here again we have 40,000. Done? Okay. Right page. Okay. Statement of financial position of a company and limited. Okay, trading company. Okay, it's in trading business. Okay. Oh, we have to calculate trade payables turnover. Yo. Okay, how to calculate trade payables turnover? Whenever you solve this question in practicing, do write the formulas. This is the only way to learn the formulas. Getting my point clear? Whenever you solve this question, don't do it in a hurry. Just write all the formulas. When you whatever formulas you are applying, wherever you are applying, write the formula. This is the best way to learn the formulas. Okay. So trade payables turnover means trade payables, payables multiplied by 365, and okay, divided by uh, divided by net credit purchases. Okay, this is the formula. Okay, so wherever you write the formula, na, so what will happen? You will able to learn the formula. Okay. Now, if you go back and you find trade payable is given, where is trade payable? Oh, yes, trade payable is given. Yes, yes, yes. 42,000. Done. 42,000 trade payable is given. Okay. Now, 365. Okay. Third thing was purchases. Purchases was 6,000. Here. Here we are. $600,000, out of which 80% were on credit. 80% were on credit. Getting my point clear? So it means 480,000. 66, right? The 40 days. 600,000 multiplied by 80%. 480,000. Yes, the formula is solved. Okay. So what we have to do here? $42,000 multiplied by 365 divided by 480,000. Got it? And you will get the answer over here. So थोड़ा कर देता हूँ. Is equal to how much? That would be 42,000 multiplied by 365 divided by 480,000. The answer is 31.93. It means approximately 32 days. 32 days. Okay. This is trade payable turnover. Okay. Now come to trade receivable turnover. Okay. What is the formula? Trade receivable multiplied by 365, okay, and divided by net credit sales. Everybody will ask why I'm writing net credit sales, because we have to deduct sales returns from the total sales. We have to deduct sales return and cash sales both from total sales to get net credit sales. But here we don't have anything like sales return or purchase return. That's why we are not using it. But actually the formula is. Okay, now move to the question again. ये वाला इसको delete कर दो. Okay. Now come to this trade receivable. Yes, we have given 30,000. Here is the trade receivable. Okay. But the problem is sales is not given. But we have given a clue. Credit sales were 30% of all sales. Okay. Now come here. The company had a gross profit margin of 40%. The company's gross profit for the year is 420,000. Gross profit margin is given. So what we have to do, just we have to do some calculation for sales. Margin is equal to gross profit divided by sales multiplied by 100. This is the thing. Okay. Now this is a formula. Using this formula, we can calculate easily sales. How? Margin we know, $420,000. Okay. What I'm writing here. Margin is 40%. Okay. Is equal to Profit 420,000. Sales we don't know. Multiply by. Now we can easily calculate. Okay. 420,000. 420,000. Okay. 420,000. Multiply by 100. Divided by 40. 150,000. So sales is 1,050,000. Got it? This is the sale. And now we have to take 30% of that sales, which is credit sales. 315,000 is the amount of credit sales. Okay. So what we have to do here, trade receivable was 42,000. No, that was 30,000. So 30,000 multiplied by 365. Okay, divided by credit sales 315,000. And we'll get here turnover. That was how much? 30,000 multiplied by 365 divided by 315,000. The answer would be 34.76 means 35 days. Getting my point here? Okay. ठीक ये हो गया trade receivable turn. अच्छा, okay. Return on capital employed. Now, return on capital employed. Sorry. Formula is profit before interest and divided by shareholders equity plus non-current liabilities. Okay. Achha. Now, what we have to find out, if you move again, okay. Now, company's profit for the year was $182,000. Yeah, yeah. अच्छा पहले इसको मिटा देते ना ताकि ये कंफ्यूज ना करें दोबारा. तुम भी जाओ. Delete. $182,000 is our company's profit, and the interest they must have paid 8% on debentures. So $250,000 multiplied by 8%, that is 20,000. So we have to, the profit before interest is 182 plus 20,000. That is 202,000 is the total profit. We don't have a provision for taxes in this question, so we don't need to worry about that. Okay. Now, move to the next page. Okay. So here we are. So profit before earning and tax is $202,000. Okay. Divided by now again we need total shareholders equity. Total shareholders equity is 1282. Okay, 1282 is total shareholder equity 1282 plus long-term liability 250. That makes 1532. Okay, 1532. Here we are, and we are going to write 1532. 1532. Okay. Multiply by 100. Multiply by 100. ये आंसर आपका आ जाएगा 202,000 divided by 1532,000 multiply by 100. 13.18%. Rounded up to 185, so 13.19. 13.19. This is the answer. Return on capital employed. Okay. Move. Sorry. Now the last is non-current asset. Formula is net revenue divided by net book value of non-current assets. Now, this is the formula. Okay. Now, net revenue is how much we have. Net revenues, again, what we have to be careful about is what we calculated here, sales. 1 million and 1,550,000 something. Okay, that was here. Oh, I removed it. Okay. Okay. Now, net value of current non-current assets, book value 1520. Here it is. So मिटा देता हूँ. Okay, 1520. That's the easy part. 1520. Net non-current asset book value is 1520. Done. And the total value of revenues was how much? 1,050,000. Yes. Okay. So here we are. Okay. Okay. Net revenue is 1,050,000. Here, 1,520,000. 1,520,000. Here, multiply by 100 is equal to how much? Divided by divided by 1,520,000. 0.69 times. 0.69 times. Okay. Now the importance of non-current asset turnover. Actually, the importance of non-current asset turnover is that what we are the revenue, the inflow of revenue is sufficient with as compared to the value of non-current asset, because non-current asset is basically a big investment. So are we earning against our investment or not? This is the importance. Okay. Why shareholders are interested in the financial statements of the company? Oh my God, we all know that. Okay, they are interested because to know the financial stability of the company, and there are so many reasons. Okay, now question number 4, costing. Explain the meaning of allocation. Allocation means when we charge the total, when we charge a cost to a specific cost center. This is allocation. When we divide or charge one cost to so many departments, or we divide cost into so many departments, it is called apportionment. Achha. Now, absorption costing. Give one benefit of absorption costing. Okay. The most important thing about absorption costing is it tells us the selling price. Okay. One limitation. Okay. Not useful for managers because absorption costing has fixed costs in consideration. Getting my point here. Okay, this is very easy question. Calculate the total revenue for each product by reapportioning the service department overheads. So we have to divide the cost of maintenance department into three, I think. Okay, yes, and then we have to divide store department into two. So what we have to do? 26,700, 60%, 30%, and 10%. 26,700, 26,700 multiplied by 60%. So it means 16,000, 020 here. Okay, 30% here. 26,700 multiplied by 30%, 8,010 here, and 26,700 multiplied by 10%, that is 2,670 here. So it means total cost of, we have divided 26,700 into three departments and it's gone. So subtotals how much? $275,000 plus 16,020. That means 291,000. 291,020. Here 103,200 plus 8010 111,210 111,210. Here 19,200 plus 2670. Answer is 21,870. Now, in second step, what we have to do, we have to divide the stores department into two, assembly department, and the ratio is 75-25. Okay, 21,870 multiplied by 75%. That means 16402.5. 16402. Okay, we can make it 403. और यहाँ पर हम क्या करते हैं, इसको माइनस करके निकालें. 21870 minus 16,403. 5,467. 5,467. Now, if we get the totals here, 291,020 plus 16,403, 307,423. 307,423. Okay. Here, 111, 210 plus 5,467. So 116,677. And here it is gone. 21,870. Okay, that is 21,870. It's gone. Okay. Now these are the total 307423, 111677. Okay, done. What's next? Okay, calculate the absorption overhead rate for each department. Assembly. Okay, now what we have to do, assembly cost, the total overheads of assembly cost we calculated in our previous page. That was 307423. Okay, yeah, 307423. Okay, 307423. Okay, now divided by, I think the best for assembly department is machine hours, 1430, 1430, and the answer would be how much? 307423, 3074 divided by 1430. 214.98. 214.98. Okay. Now finishing department, what would be the best? Labor hours. So that was 1116,677 divided by 840. 111677 divided by 840. So that is 138.9. 138.9. Okay. Is equal to 138.9. Okay. Done. Now calculate the under absorption or over absorption of overhead for April 22 for the assembly department. So actual for factory overhead. Okay. So what we have to do, first we have to calculate how much should be absorbed overhead. Absorbed overhead is equal to 800 and, no, sorry, it was assembly department. Okay, so we have to use on machine hours. 1310, 1310 multiply by 214.98. 214.98. The answer would be 1310 multiplied by 214.98. The answer is 281,623.8. 281,623.8. Okay. Now overhead actual overhead is how much? Here, $285,400. So $285,400. Okay. So it means we have under absorbed. बहुत बड़ी line होगी. We have under absorbed how much? Minus 2816 or minus 285,400. That is 3776.2. Getting my point? Minus, the answer will be minus 3,700 and 3,000. 3,772, 76.2 under absorbed. Under Now move to the next page. Oh my God. Again, first we have to understand the question. This is break even. Okay. Another factory. Okay. We have to understand the question is very big. The answer is very small. The question is very big. What we have to understand here. See. At another factory, the company manufactures two products. The factory uses marginal costing. Okay. The following details are given: direct material per unit, direct labor, fixed cost per unit, selling price per unit. Okay. And normal production 8,000, 4,000. Achha. The company has a major customer who usually orders 5,000 units of product X each month. This order is included in the normal production of 8,000 units per month. In May 2022, the customer has asked for 9,000 units of product X. If it is not possible to supply quantity, the customers inform the directors that they will place the entire order and all future orders with another company. The directors are considering two options: stop manufacture of product C and devote all labor hours to production of product X. The company will be able to complete all the normal orders for product X and the increased orders from the customer. The workforce for product Z will require some retraining costing. Okay. Now, if it uses option A, what he has to do? Calculate. Okay, option A. Now, contribution. If it is using option A, contribution, it means it's selling now only 12,000, all 12,000 of product X. And the contribution was product X was how much? So we have to move back to see. Okay, now see the contribution. Selling price 24 minus 6, direct material minus 9. So that means $9 is contribution per unit. So 12,000 multiplied by $9. $9. The answer would be definitely here $108,000. 108,000. Done? Okay. Contribution. Now fixed cost. Fixed cost would be C. How much? $5 multiplied by 8,000. That is 40,000. Okay. 40,000. Acha. Plus this product Z's fixed cost. 24,000. 6 multiplied by 4,000 is 24. So 40,000 plus 24,000. 64,000. And one more thing is left, that is this one. This one. The workforce for product Z will require some training costing $3,000. That is also included. So that would make here your cost, fixed cost, how much? 40,000. 40,000 plus 24,000 plus 3,000. That would make altogether 67,000. So it means profit would be how much? Profit 108,000 minus 67,000. So profit would be $41,000. This is option A. How to solve option A? Now come to option B. Now, what we have to do in option B? In option B, product X and product Y both will move together because we are not going to stop. See what happening in product. Maintain normal production levels. Okay. Refuse the customer order. Reduce the selling price of product X by 5% in order to enable all normal production of this unit to be sold. Selling price gira dete. We are reducing selling price just to increase the sale of product X. Avoid that customer. Okay. In that case, what will happen? Oh, we have to move another page. No. This is option B. Okay. Now contributions. Product X. We have to be careful. Contribution was $9 before, but what will happen? 24. The selling price is 24. If we take it 95%, it means 22.8 would be the selling price of product X minus 6 minus 9. So it means the contribution will reduce to $7.8. Okay, for product X. So 8,000 units. 8,000 units multiplied by $7.8. So that means how much for product X? Now contribution multiplied by 8,000. 62,400. Okay. Now for product Y. The product Y is same. There is no change in the selling price. If you are that is so that means 30 is the selling price. Okay. Minus 9 material, 9 for labor. 12 is so 12 multiplied 4, $48,000. Okay. So $48,000. Okay. And I'm going to write it over here. 4,000 multiplied by 112. Okay. This is the thing. Okay. Now fixed cost FC. Okay. Here FC would be how much? The same now 40,000. Uh, that was sorry 8,000 unit multiplied by $5. So that would make fixed cost 40,000. Okay. And here it will be 4,000 multiplied by how much was the fixed cost? That was 6. That means here fixed cost is $20. Okay. Now profit. Here 62,400 minus 40,000, 22,412. Here 40, 48,000 minus 24. That is 24,000. So total profit would be how much? 22,412. 22,412 plus 24,000. 46,412. Oh, sorry. 46,004. 12 is over. Okay. 46,004. So total profit. This is total profit. Here profit is 41,000. Here 46,400. So I think option B is better. Okay. Advise director which option they should choose. Justify your answer by discussing both financial. What in my mind regarding this question? It's my opinion. Okay, you are not necessarily need to follow my opinion. That we have to go for option B. The thing is, these kind of customers who ask for a larger quantity and they give you a threat, okay, we will discontinue buying from you. These options will always be available. But if we cut down product Z, the diversification in production will be gone. If we are producing two products, we have a diversification. We are producing two types of products. And I think we should not lose this diversification. This is my opinion. Your is yours, whatever you want to write. Okay. So that's the end of the question today. MashaAllah, we have finished the question. And finished the paper as well. And inshallah, tomorrow I will start working on June 2022 paper 32. That's for A2, inshallah. And it is again a humble request. Please subscribe my channel. Thank you. Take care. Allah Hafiz.